Right. So welcome everyone. Welcome everybody. All right, welcome the community. So I'm gonna put everyone on mute. I'll leave the waiting room open, waiting room off. All right. Let's crack on with the markets and see what's going on. So everyone's gonna mute and let's go for it. So let me hit record on this as well. All right, guys. So welcome to our live analysis session. Today is Wednesday, the 18th of August, 2021. So starting off with where we are, we had a very interesting time on the markets. I'm going to start off with New Zealand dollar pairs. Now we had New Zealand dollar news, okay, and it's been a reaction of mixed signals. So the news is at the moment, and we will pull it up on normal time in a moment. But what we've had is interest rates have stayed the same. So the New Zealand dollar's OCR has stayed at 25 base points or 0.25% instead of the 50% that was the consensus, was 0.50% or 50 base points. Now, that caused a bearish reaction on the market because a hike in interest rate would have meant that the economy is picking up and that things are getting better. So the fact that that did not happen, we are in a very interesting place with the New Zealand dollar. Now, I knew the price would go short anyway from a technical standpoint. We have already discussed the different reasons as to why. I mean, even though the price has been in a range for a while, the whole month of July was a range. Even though we've been in that range for a while, the key here is that if we go from the highest swing to the lowest swing, we're still, the net direction is slightly more lean towards the bearish side than to the bullish side. Okay. Now, if I mark this out with the market structure, you can see the A, B, C, D formation short. Now, the length of this trend here from A to B is, let's see here, 224.7 pips. And then we see up here, we have a range from this swing from here to here. So just a bit short of a D swing. So we haven't finished going short just yet. So the price yesterday did a very interesting move. So I did have the opportunity to observe the price for a moment before I went back to sleep. But the price action here is still showing bearish signs. We had a very strong spike in the price, and then a very strong return back. And now the price is coming out to fill the wick. So to me, the NZD USD's descent to the short side hasn't been affected. Now we do have FOMC news today. So the FOMC news that we're going to have most likely is going to produce very strong movement. I believe the price will give us stronger movement down on the short side again. And I do expect the price to push short. At the moment, the price has really been descending short and there isn't any real signature we can go by. I mean, there are a few things that we could use. I mean, on the H1 here, the H1 demand zone at the moment, the price, the body of the candle has now closed beneath here and we've had a return. So we're back on the supply side of the market. And I mean, as an entry, this is a good entry you could have taken right now. And I expect the price to continue descending on the short side. From the H4 structure of price though, we're still here. So the H4 structure, the price hasn't really been affected too much. We've had quite a few moves in and out of the area, but in terms of the structure of the H4 demand zone, the price hasn't really done much yet. But I'm expecting, I mean, we have 18 minutes until the next H4 session. So if you get a body close beforehand into the new session, then I'd expect one more return most likely from the H4 structure. And then we should be looking for a sell. And this sell, I believe, will continue to make its way down to lower targets. Now, what kept the price upwards for now, if I go back now, so I'm doing the reverse of a top-down analysis. I'm doing a down-up, if you want to call it that. The price did take the low of last month now, which is this B swing here. And this is why we saw that reaction on the upside, because there will always be liquidity above and below highs and lows. So that movement we saw here, the price has now returned here, but there's still more lows for the price to take. There's a large group of lows here that the price has gone for, and then there's another set beneath it here. So really this D1 structure is what's holding the price up now. From a technical standpoint on the daily, NZD USD needs to go long. The bias is bullish for now until further notice, but we haven't even had the return here, which was a good point that was pointed out by one of our coaches in the World Group Academy, Matthew, or Matty if you prefer. The price does need to return to this supply area because at the moment we have inefficiency at this area. Now, the way that the price has taken this low, yes, the market structure is bearish at the moment, but the price could equally, and this is, don't get me wrong, the price could equally push up to the upside and do a very large movement and then sell off afterwards. There are many different ways the price could go, especially in moments where there is, heavy pieces of news coming out, especially something like the FOMC minutes. The market has the opportunity or the reasoning or the excuse to be able to push out more pips than normally would happen. So for something like NZD USD, the price could very easily go the other way completely without much warning. Or with some warning, but not with, the level of warning that you would probably want. Okay. Now on the weekly structure, again, and this is my main direction, which is still bearish. Although we have this inefficiency here, I do think that for the price to reach those kind of levels back above 70 cents and towards 72 cents, we're going to need a very strong area of demand, which on the daily, I don't see the weekly resemblance of that daily move or that daily zone. The next weekly zone that I do see for demand is this range right here, which is around about 68 down to 67. Okay, now there are lower ranges where the price didn't completely fill out all the efficiencies it needs to. For example, here, we're lacking a return back into this order block right here. So I'm in my mind and looking at the price action here again, I'm going to take off this line so that I don't confuse you all. But when I look at the price action from this aspect, guys, the supply zone, which, let me place this here. Supply zone, which we place here, okay? This is our supply zone. My interest is in this range that we've had for basically 2 weeks now. We've had a very strong break outside of the range, at least, or almost outside of the range. We've had a very strong red candle here, which after an accumulation range like this and the price showing this very strong bearish sign, I'm led to believe that the price is on its way down even further short. Okay. We haven't managed to, as I said, we had a very strong bearish candle a few weeks back. And the supply zone took about, when we had the return on the bullish side, the price probably gave us a return or filling of this candle about 70% of the way, but not completely. And the price after this bullish candle was formed has just been hanging around this area in a range, which means that this area is a strong area of supply. And I'm led to believe that the price is actually doing the ABCD structure we're looking at. So I think we're going to get a very strong push down. And I do expect the price to get back to even 66 cents back down here and potentially even back down to 63 if the market wants to take the opportunity to fill out this efficiency. Now, it can happen in one night. It can happen over a swing period of maybe a week or so, depending on what the outcome is. But the FOMC news is something to look out for. But on the daily time frame, I think the price is just really holding down what is already achieved. Now, the price taking the low the way it has in this manner, I do want to put a point out here that because we've had a very good break of market structure, I would like to also on a more, I wouldn't say in a more smaller expectation, but one thing I would say that we could potentially have a pullback long, but it doesn't have to be a crazy long back here. We could also potentially have a long where the price simply just gives us a return back into supply after breaking market structure and performing some reversal signatures. And then from there, we could see the price deliver to us a very strong return here and then a push down. This is another option that we have here. And we're going to look at the news in a moment to see what is available. But again, I wouldn't be surprised here. I'm using a trend line this time. But if you just want to follow the swing low, you have a very clean swing low that's been closed beneath. So very strong break of market structure. A return right here wouldn't be so bad. And if the news, at least from this daily structure, if the FOMC news can cause the price to give us a long temporarily, and then, sometimes news just is an opportunity for the price to pull back into an entry. And then in what I will call the normal market conditions, the price will just gently make its way down to the targets over time, you know. So that is another option that can happen. Of course, it will just really have to depend on, now we can't wait for the day to close, because by the time the day closes, whether it's a wick or a body, it'll be too late because the FOMC news would have already happened. So I'm still keeping my eyes peeled. I mean, if the price starts to make its way back beneath this daily zone before the news even comes out, then it'll be very unlikely the price would pull back, in my view. But from where we are right now, the price is making its descent downwards, and that could potentially continue, all right, from where it is. And we'll see what happens over time. Now, currently in the market, we can see that this area of demand being used as supply is working out quite well. The price is already dropping quite a few pips. It's already done about over 10 pips in the last moment, or over the last couple of minutes. And I guess it's set to continue. But this is why I'm taking a more reserved look. And this is NZD USD for you guys. So next NZD pair I want to look at is going to be pound NZD. Now, pound NZD did a hell of a lot of pips, and so did Euro NZD also. I find that these Asian European pairs do quite a few pips with the news. So just to show you, we had a very strong spike, which you could have scalped actually, of 200 pips. We had a 200 pip spike in 1 minute. This candle here, or this movement here, just to put it out here, this movement was in 1 minute. So this blue candle here was 1 minute. We had in 1 minute, we had 184 pips here. Now, the price has managed to sustain this upwards movement, and the price is still moving further along, which I expect it to continue to do. Pound NZD from the H4, to me, is definitely bullish. The price did use a very nice H1 zone to make this ascent upwards, which was right here. So with this supply zone right here, now on my charts is not the best, so you might have to use another chart to use it to show this, but I can use the H4 example instead. It's very similar. So the H4 area here, the price used this area for supply. We've had a break above and a return here with the price spiking beneath. And now we've seen a long happening here, which looks like we're in this phase of continuation. So I expect more New Zealand dollar weakness. And from this, I expect the price to actually give us even more pips than what we first had. So I would keep my eyes on pound NZD. And my areas I'll be looking for, if you're a pound NZD trader, will just be really any of the supply zones really that the price can break above. Now we have one here where we've had one attempt, and now the price has just got there again, but we haven't got a body close. But a body close above there would mean a very good continuation, and probably the best continuation confirmation would be here at this H4 supply right here. Make this drawing correct. So at this H4 supply right here, we've seen the price has spiked and kissed the area, but not really returned inside just yet. So I do expect the price to have more journey on the upside, and then any of the breaks above here could give a very good and very simple continuation entries just to continue the wave up. Now, where could pound NZD go? I mean, there is a lot of upside potential in pound NZD for many reasons, but one of my main target for pound NZD is going to be this high right here. Now I'm going to change the horizontal line to something that we can work with. I'll use a nice forest green and change this to. But I expect the price to get here first. This is the first supply zone in sight, which is from where we are right now, is almost 400 pips away. It's 357 pips. Once we get to this area here, I'm looking to see if the next targets would be this set right here of highs. And then from here, I'm going to use the monthly structure. Now, from the monthly time frame, pound NZD is definitely still bearish. Okay. I mean, even if I was to use a trend line, I could start from the top here. The price is still very heavily bearish. You could use a plethora of trend lines to analyze this, but I'm not using the trend lines. But there are just several areas that we can go to for the price to give us price action movement. Now, I do personally think that the price will attempt to go for this high right here in 2020 at 214 and possibly return back into this supply zone again. That is my expectation. But again, we'll have to wait and see. Again, from the weekly structure, if we started from here as an A swing and here as B, this spike right here is a C. Now, if there's enough bullish potential on the pound, which I believe there is, fundamentals in the long term and weakness on the New Zealand dollar, we might actually get this movement again. Who knows? But from what I can see, at least there are two good targets we could go for, which are these two right here. And if the price now, the wicks do get filled out, okay? When a wick forms, they do get filled out. So this wick that we had here from the coronavirus period, I remember when this spike happened, I was so confused, I'm not gonna lie, as to what was going on. But the price did wick up right up to this area here. I was confused before, but this wick has a reason. It was fulfilling some inefficiencies from years back, and the coronavirus gave the opportunity to do that. So let's see what happens with pound NZD, but target 1 and target 2 for sure. I do think the price can achieve that. All right. Let me just do the final on the New Zealand dollar side of what I'm looking at, which is an alternative to NZD-USD, which is the New Zealand dollar Japanese yen. Now, I do like NZD-JPY. Okay, I'm always strategic with how I pick currencies because I like to think of currencies as to how their central banks work and then how the economy works, because that will help for us to have, for example, if you have a New Zealand dollar pair and you pick a I'm saying crypto, if you pick a currency which is paired to it that is not a commodity currency but a consumer one, then how you approach the charts and how you approach the news will be different. Okay, so for example, if you paired the New Zealand dollar with the Canadian dollar, which is a commodity currency, now you have two commodity currencies paired together compared to if you have maybe say NZD USD, where one is commodity, one is consumer. All right, but this is not a teaching session, so we're not going to go through that right now. But NZD JPY, still similar in the pattern of what the price is doing. Now, why am I picking the Japanese yen? Specifically because of the stability of the Japanese yen over periods of time. The characteristic of Japanese yen pairs is to really range or to have a very strong one directional move for a very long time. So Japanese yen pairs are really good for swinging trades from one to the other a lot of the time. But now anyway, if I start from the daily here, NZD JPY has also given us an A to B swing here. We've had the formation at C, and now the price is making its way down. Now, I was looking for NZD JPY to give us a bit more of a pullback here when I gave the trade, but it didn't return to supply here, which I'm upset about. It rather just stopped here. And since I've given the call, we just missed it by a few pips. It's done 270 pips. I'm so upset that the price didn't give us what we want. And sometimes that can happen. You know, the price doesn't always have to do exactly what we say. All right. But just looking at the market structure here anyway, we still had the same similar spike from the news. The price is still in a very similar kind of H4 style area here. And NZD-JPY, why I would like to take it possibly is because the dollar itself, because it is the largest currency in the market and also the most important, I think that NZD-USD is prone to more market manipulation, unnecessary market manipulation and spiking than you probably would see with NZD-JPY. The Japanese yen is always one of the main goals of the Japanese yen is always to be as weak as possible in certain scenarios to make sure that their export prices and prices of their goods stay comfortable for the world, because they want to stay in competition because their major competitor is China. And so they want to make sure that their currency is as weak as possible so that it will be favorable for exports, because their GDP is about 70% in terms of ratio. So if their exports go bad, their country will fall under the weight of that. So, you know, Japan really can't afford to have the wrong currency price, you know. With China, I'm not sure if the pegging has been removed, but the Chinese yen, if I'm saying it right, Chinese yuan, sorry, could never say it properly. But, you know, I think with the Chinese yen or yen, guys, for those of you in China, or please don't be offended. I just don't know how to say it properly. But a lot of currency pairs that are commodity pairs, you know, even some of the dinars, a lot of them are pegged on purpose. Okay. For example, even the Saudi Arabian Riyadh is pegged to the US dollar at a certain value. And this is only because of one reason: to keep interest rates, okay, or to keep the exchange rate favorable for transactions, especially I would say oil countries that have a lot that do deal with oil a lot and exporting oil a lot. They usually try to strike a deal to just keep a peg there so that there's a set exchange rate no matter what happens. So there's no fluctuation on the market. Okay, so there are actually some currency that use, and students, I will be doing a lesson because there's some things I found out about certain currencies which may go under something called global revaluation, which can make you very rich from a very small amount of money. I will be doing that lesson on Thursday, so please be there. But again, students, if you're not too sure again about what I'm discussing, chapter 2 and chapter 3, especially of the course, chapter 3, ranging trends, will give you more detail about what I'm talking about when it comes to pegging. So why am I saying this again? I'm looking at NZD Japanese yen. There is potential for the price to go long or short. I'm hoping that most likely we will see the short in this week or the initiation of it, and then we can swing the trade. I don't really see a nice trade at the moment on NZD Japanese yen for now, but I will keep my eyes peeled to see whatever happens with it. But this is definitely showing a clearer sign of bearish activity. And I think the targets are a little bit more clearer to see. Okay, we have pure demand right here, which the price is not reached right now yet. And then we also have lower zones down. So let's see what happens with NZD-JPY, and then we can continue from there. All right, so those of you in the live session, I hope you guys enjoyed. No, I'm joking. We still got some time anyway. Let's look at some pairs and see what's going on. So I'm going to go through the majors. Let's just have a look and see. So pound USD, we've had a strong short. Okay, I got stopped out of the trade right here, and I made a basic mistake. Even though the price was in this area of demand, the only thing that was missing is that I should have recognized the fact that we had bearish market structure here. So A to B, B to C was actually very clean. When the price returned here, I should have used sense to realize that the price, sometimes when you have a bias in your mind, even the best of us can do this. Sometimes you might miss out on some important clear features. This wasn't really complex as a trade. I mean, you didn't even have to really know, complexities of market order books or anything like that to capture this trade. This was just simply simple market structure, A, B, C, and D, and then the new cycle here. This would have been our entry. Stop loss goes above, and then profit would be down to this move here. Now the price is retracing at the moment. And again, I do want pound USD to go short, as I've told you. The reason for this short, or the reason why we need the price to go short, I still believe that the pound is bullish and there is a bullish bias on here. And this fulfillment of efficiency from taking these lows right here, we've just produced a new C in my mind. Unless the market structure or the price breaks below this market structure, from where we are, we have an A to B swing, which was formed at first. The C failed, and then we had this D, but now we've had an A swing down here. Up here is the B, and down here is the C into demand. So we do have market structure break on the lower time frames. Again, I've spoken about this in good detail. So YouTube family, students, you guys should all be well aware of what I'm talking about. We have an A to B swing, but the market structure is broken here. And what we're really looking for is just a clarification of a bullish structure of price so that we can continue going for a long. So I would say from where we are right now, this A to B swing and then A and B here, what we want to do is to find a bullish market structure, and the price is getting very close to this area here, which is where I expect the most of the demand to come from to push the price to where it needs to. Now, where it is right now, we've had a wick opening beneath this low, and the price is starting to reverse. Now, how far this is going to go, it will depend on what's going on with the price. Now, to me, this is a nice retracement, but how far this retracement is going to go, I'm interested to see. I think we have one more short, but this is just a healthy retracement that the price is doing. Now, this actually could be the retracement for a long too. So don't get it wrong. Where the price is right now is not so bad, even from a Fibonacci perspective. It is below 50%. Okay, it is in some area of discount that I like to see. So I'm watching to see what the price will do. It reversed literally at 62, which I'm a bit suspicious of because that's a retail trader Fibonacci level. But anyway, the price always has the freedom to do what it wants. Okay, so again, I'll be watching to see what happens here. So we did have as tiny a breaker market structure. The price just about returned to demand and it's done a few pips, close to 40 pips. So, I mean, already if you got into this trade, I put a stop loss of 11 pips here and 37. So you kind of be like 1 to 3 R&R so far, which isn't bad. This only has to do another 13 to 20 pips and you definitely have 1 to 5 and you could literally close. And I think that's highly possible here already. So I'm going to watch out to see what pound USD does. I hope this is just a retracement and then we, again, from the H4, what I really want to see is the price turning into these deeper areas of liquidity here, and then from here we can decide to go for a short. Go for the long. So I'm hoping that we're just having a pullback. It looks as though we're just having an A to B, C retracement, but we'll see how far the price will take it. Again, when we have FOMC news, anything can happen really. So let's see what happens. Now, I believe that the price, whatever inefficiencies are on the upside here, like where I was talking about, I do think that most likely the price will fill it on the way back up because we're quite far away from these 1.40 areas by 137. And I expect the price to continue there. So let's look at Euro USD as 2. Let's see what's going on, if there's any trades. Again, I'm bearish on the Euro versus the US dollar. Now, I had a trade long here earlier on that I called, but I made personally my students close at this entry here, even though there was a chance for a pullback because the market structure here to me wasn't really screaming long. I think the reason why I would say that even more is because in this 8-hour period here, so first H4 and second H4 session, first one being right inside of the UK session and second being in the US session, we had such a large recovery of the long positions here over this period. So in 8 hours, we had a recovery of almost the whole week's price action. I will need to pay attention to that. So if I draw roughly to where we got to here, down at the lows here, or if I was to do the opposite way, I'll just go from the low of the last candle I'm talking about. So if I just put this line here, so this is the second H4 candle here I'm talking about. And let's put this here. And this is the first H4 candle I'm talking about. So we're on the H4 right now, and the period separators means that from this point, okay, from the left to right represents 1 week's worth of price action. So in 1 week, Euro USD did just under 100 pips, okay? And in this last sessions here, so the 17th, so in 8 hours, the market basically took back 70% of the bullish activity or bullish price action that we saw last week. So that large drop in gains makes me think that the euro is still heavily bearish and we're most likely going to see the price push a bit lower. Now, I see the price has taken the low, but again, the reaction isn't that fantastic. We don't have a very strong reversal after this low has been taken. So to me, I think the major direction is still bearish here. Now, it doesn't mean we can't have a pullback. The price is still accumulating here and it could even push back for a swing. But I'd rather take my chances that the price is most likely going to continue going short. Now, if it does go long right now, there are several areas the price could go for to do so. And I'll be watching to see what kind of areas we have available. But to me, Euro USD is definitely a short. I still wanted to see the counter trend, but the counter trend doesn't seem like there's enough strength to pull that. The only thing that could do that is we could see a long still. And if it did do a long after all of this noise here, it will be interesting to see that. And I'll be prepared for if that was to happen. So I'm keeping my eyes peeled on this. I think Euro USD is, as a technical study, is a good enigma to watch out for. I probably won't trade it because of that reason, because as much as I like to think with complexity, I like trading to be simple. So if something has too much complexity to arrive to an answer in trading, I'd rather just look for a much more simple option. Okay. All right. So I'll finish off here with YouTube for USD CAD here. So USD CAD, again, just to recap where we were. So the price has already hit the first target and the market decided to go for the lows. Now, again, the price going for the short was also palpable as well from where we had the entry from. So the price returned here, but the liquidity wasn't strong enough on the supply side to keep this movement here. Now, the positive thing is that if you were looking at this without the price action here, it did look like we had a bearish A to B movement here, but then when you look back further, you see that the trend is still quite bullish. So the price really kind of stayed on this bullish trajectory and is continued here. Now the price is retracing at the moment, and I've given an advisory trade signal for a long, and this is just based on a normal H4 continuation. Now from the H4 price action here, the price could either give us, I mean, this is the most easiest area to use because this is the most highest up supply zone, or the most principal supply zone in the movement short that we've had for the last couple of weeks since July, really. So the price is now returning to the other side, and I would expect the price to launch from this area to continue along. And my first targets really, again, is going to be for this area of supply right here. And it's very simply because I didn't see the return of the price getting back into this area here. So I would like to see the price return here and give us quite a good long. Now, from the projection I'm seeing here, I think from the FOMC news, most likely the US dollar is going to see some gain in strength. Now, we already know that the US dollar has tapering going on. And so US dollar tapering would be the central focus that everybody will be looking at. Now, the signal advisory that I've given is for return back specifically to the H1 demand in here. All right, now the price has spiked in the last hour very close to the low, but hasn't returned in here. So I'm really hoping that the price would spike into this area as necessary and give us a return to the demand liquidity, which is available here. So this is why I'm looking for a buy inside of this area. So I will personally be watching for this trade. I really hope that the market doesn't, I hope the FOMC news does something. If it does nothing, then I'd expect the low to be taken tomorrow into this demand area, and then this would be a long. And I can see from here, the market's kind of clarified its structure now, very much so for the bullish side with this A to B swing here. Here's the A and here's the B right here. And so the next point I'll be looking for would be the C, which will be our entry. Now, on this side note here, the risk will probably be below on my first entry. You know, my new style of risk management that I'm really starting to love is having a very tiny entry, or very, not insignificant, but a smaller sized entry for the initial entry, not even out of lack of confidence, but just to give the price room and just to cumulatively build my position as the price does what I want. It starts to fulfill criteria on the upside. So it starts to break certain highs and lows and things of that nature. So this is what I'm looking for. Now, the only side note that I would say as a potential what the price may do also. Now, the reason why I like USD Cad, just to review this quickly, if you go to the left, all right, until at least this range right here of 1.26828 and above, there isn't any supply zone, there isn't any order block whatsoever that could potentially cause the price to do anything other than go long. And this is why I like it, because we have free space basically. There isn't anything at all that could stop the price from at least getting to here. So USD Cad, even though it's been a bit of a tricky one, is a much more obvious long than others, because many other, you know, pairs have, you know, quite a few demand and supply zones to the left. But with USD Cad to the left until at least 1.26828, which is 75 pips from where the price is literally right now, if it was to take off, there is nothing. So this is my favorite trade for the week so far, because it's quite a simple one to go for. And if the worst comes to worst, we can close at that first target if the price starts to reverse, and then wait for the next entry. So I'm watching here to see how the price does what it does best. And this is going to be my trade for the major trade I'm looking for. So for you guys, YouTube family, people watching, if you want to look for a trade USD Cad, this is my advice to you for the setup. So YouTube family, our time is